In May of 2020, FreightWaves Live is headed back to the largest freight market in the Southeast, Atlanta, Georgia. Join FreightWaves for our best event yet, featuring captivating keynote speakers and rapid-fire demos of technology that is sure to take our industry to the next level. This is your opportunity to interact with some of the most innovative leaders as we mark a new decade in transportation. See you in Atlanta May 5th and 6th.
Hello and welcome to this Wednesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we have Luke Falasca giving us a broker update. We also have Mike Baudendistel here for a shipper update, but first a word from Strickland with the carrier update sponsored by PowerFleet. Stay tuned.
Hey everyone, and welcome to your carrier update presented by PowerFleet. So, tender rejection rates sort of taken a little break from plummeting like we expected to. I've talked about this for the last couple of days if you've been watching, but it is very interesting to break this down into the separate modes of transportation. So, we have the normal tender rejection rate for the average of the country right here in blue, 7.6%, slightly up day over day, about 3 basis points from 7.57 yesterday. But if you look at this green line down here underneath it, that's your dry van tender rejection rate, and it is falling right now, 7.11%. It's slightly down day over day, still horizontal, a little bit more horizontal than we expect this time of year. But if you look up here in the orange line right here, this is the reefer tender rejection rate. So reefer rejections just spiking right now, coming out of this little trough that we normally see this time of year to 17.16% as average for the United States. So where are all these tenders being rejected? You look here, this is the weekly change in reefer rejections by individual market. So the Midwest right here, which is normally a pretty big hotbed for reefer activity, all red. So weekly change means that this part of the country showing loosening capacity conditions. Reefer loads are being covered a little bit more frequently here versus this time last week. Nashville cooling off a little bit. Here around the Charlotte area, we talked about this yesterday, Charlotte market here in Raleigh, North Carolina, reefer rejections are increasing week over week, and we have little isolated pockets of rejection rates increasing week over week throughout the East Coast. Savannah market, not a big market for reefer. Don't expect to get anything huge out of there. So the reefer rejection rate showing a little bit more activity, but the volumes are not necessarily proportionate to that. So don't take too much into that. So some of the bigger markets for reefer rates, or reefer loads I should say, are sitting out here in the West Coast, and I want to target some of those today. The Salt Lake City market and the Phoenix market here, I'm going to point those out here in a minute. So Salt Lake City showing one of the biggest increases year over year in terms of reefer load, reefer demand. So right here in the blue, you've got the reefer outbound tender volume index. And you can see here in the last several months, we've really picked up a lot of volumes, going all the way up to 68.93 on the reefer tender volume index for the market. And then reefer rejection rates have been slightly elevated out of this market versus the summer, which is what we consider the traditional peak for reefer activity, because of all the produce shipments, and it's hot outside. People are having a lot more beverage consumption. All that kind of stuff needs to be taken care of in the summer, but over the winter we need protection from freeze and other things to consider, especially going on those reefer loads. So Salt Lake market is one of the biggest growing markets in the country in terms of reefer demand overall. Reefer rejection rates are slightly elevated and continue to increase week over week, 32.66%. So the Phoenix market, one of my favorite markets to talk about in the winter because of the winter produce season. So I have reefer outbound tender volumes and reefer outbound tender rejection index right here. So the reefer volumes right here, again, not a huge outbound market for reefer contracted freight, but still we're watching these contracted reefer volumes increase significantly as it relates to the market itself. 17.66 is not a huge number, but it is significantly up from where it was previously. And this is because winter produce is starting to push right now. For about 3 months out of the year, Yuma, Arizona becomes the salad bowl, if you will, of the United States. All the cruciferous vegetables, lettuce, broccoli, cauliflower, all that stuff comes out of that area, and it creates a slight disruption here. And you can see reefer rejection rates spiking up to 11.38%. So if you are a reefer carrier, you do have some options here in this cool part of the year. And that'll do it for the carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi everyone, I'm Luke and I'm bringing you another broker update for today, and we got a good one for you guys. We're going to be taking a look at the money map here in a little bit, but just before we do, let's take a look at the main chart here behind us. Right, so over here we have a chart that we should be pretty familiar with. Right? In blue, we've got the outbound tender rejection percentage, right? So that's in blue. We see this massive spike up on the holidays, but we've sort of flatlined here. In fact, we've actually seen a slight increase day over day in tender rejections, signaling that we might have reached our floor already for this year or this month. We'll find out as we continue to look at tender rejections, but as that number maintains that level, and if it just starts to move off of that, that means there's going to be more upward pressure on pricing. Now, what is interesting is this green line here. That's the volume level. We're sitting just around, just above 9,700 on the index scale, but if you'll notice here, this green peak, we're starting to slide. So while tender rejections are remaining level, it looks like overall volumes are seeing a slight decline so far this week. So that's pretty interesting. We'll take a look at a couple markets here and how those affect them. But before we do, let's take a look here at Pendleton, Oregon. So the chart here behind us, what you have in blue is dry van tender rejections. And then in orange, you have reefer tender rejections. So you'll see here at the very end, both of these are beginning to spike. We've seen out of Pendleton, Oregon, dry van tender rejections have actually already broken through their high. So they hit a high here of around 7% around the holidays, but we've actually already broken through that. So that's a really, really good sign. So if you're moving freight out of the Pendleton market for dry-van, you need to increase your spot bids even above where they were during the holiday season, because there's a lot of upward pressure on pricing. Okay, the market has tightened. If you're moving reefer loads, you see over here on our scale, we're sitting at about 35% tender rejections. Very high, just about even with where we were right around the holiday season. So again, we put a lot of upward pressure on your pricing to shippers, because you're going to be paying a premium for any of those spot market loads to your carriers. Right, now taking a look at this next chart here, we've got the volume levels for the Pendleton market. Here at this chart in blue, we have dry van volume levels. So again, we're seeing a spike. So volume levels are increasing, right? That might be an indication as to why tender rejections are going up, as well as reefer volumes are going up as well. Dry van volume levels are above where they were the holiday, and reefer volume levels are about right where they were during that same period of time. So continue to push, call your customers to move extra freight, especially as we continue to move those, especially as tender rejections continue to rise. You'll notice over here too, some of the highest traffic, or the highest length of haul volume is going to be some of those local hauls, but also it looks like long hauls are beginning to see some increase. Day over day, there's a little over a 1% increase in long haul volume, so there is a decent amount of long haul freight moving there, so you can continue to push that pricing up as well if you're moving any long haul freight. I'm Luke, and that'll do it for your broker update for today.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Hello and welcome to your shipper update. I'm Anthony Smith and I'm here with Mike Baudendistel. Mike, what do you have for us today?
So Anthony, we're going to take a look at intermodal from the shipper's perspective. Now, if you're an intermodal shipper, you probably noticed that you may have shipped less intermodal goods over the last year. For all of 2019, intermodal volume was down about 5% on the rails. Those year-over-year declines got progressively worse as the year went on. And on this chart in blue, we have the intermodal volume on the railroad. These are containers over the past 12 months. And you see that line consistently below the orange line, which was the previous year before that, basically 2018. So the question is, was 2019 just a really bad year, or was 2018 sort of an extraordinarily good year?
Right.
The green line suggests maybe 2018 was just an extraordinarily good year because it was sort of close to that line 2 years ago on sort of a 2-year stack situation. So some of that was simply pull forward from ahead of the tariffs,
right.
Moving some of those imports into 2017 ahead of the 2018 ahead of 2019 tariffs that started, and some of it was also just some inventory destocking. But I think the big thing was just the competitiveness with the highway.
Excellent, gotcha. And a lot of information here. Is there any points here that we can glean from sonar that's not really readily available?
Yeah. So here we have basically a breakdown of intermodal volume out of the port of Los Angeles Long Beach by international and domestic intermodal volume. Now, you often hear me talk about those as being two distinct markets. International being the 40-foot containers, domestic being the 53, primarily. And what you see here is the domestic container volume out of LA pretty similar in the past 12 months. Those lines are almost on top of each other. But if we take a look at international intermodal volume, there's just a lot of negative variance there, where it was far below there. So if you just take a look at, say, Union Pacific's IR page, what you see is so far in 2020, intermodal volume's down about 15%. But Sonar takes that one step further and shows you, okay, that it's really concentrated on the international side of the business. And that's important because if you're an intermodal shipper, say if you're shipping domestic intermodal, you need those domestic intermodal containers. And so those containers are going to be more scarce than you would think otherwise, just by looking at Union Pacific's investor relations page, because the domestic shippers are being tied up here.
Gotcha. And with this intermodal perspective, how should intermodal shippers position themselves?
Yeah, I think intermodal shippers, like I just said, they need to make sure they secure those containers. It's not automatically assumed that they're going to be plentiful. And then I would also say intermodal shipper should negotiate hard on rates. I mean, this spike here shows the peak season, but actually if you were to take a longer term outlook, it was actually sort of a muted peak season for intermodal shipping. That tends to dictate what happens with intermodal contract rates for the upcoming season that take place this spring. So if I'm a shipper, I'm going to negotiate hard on those intermodal contracts, but what I'm also going to do is take a look at other modes. And right now, this green line shows the truck spot rates between LA and Dallas. The blue line shows the intermodal rates between LA and Dallas, and those are pretty close. So I'm going to try to play those two modes off of each other and don't assume that intermodal is going to be cheaper, even though it typically is.
Got you. Mike, thank you so much for that insight, and thank you so much for tuning in for this Wednesday edition of FreightWaves Now. The content doesn't stop here. We're always posting around the clock on all your favorite social media platforms, so please check us out there. We also have our FreightWaves TV app, so check us out on any of your favorite streaming platforms as well. Thank you so much for tuning in, and we'll see you on the next episode.